Hi, I'm Jerry Bowyer. This is the Eagle Investing Network. Let me remind you to hit that subscribe button. Let me also remind you to share this video with somebody else, perhaps somebody who is concerned about inflation, which is most people. A lot of people are concerned about inflation. The people who determine inflation, the central bankers and the government, maybe are the only group of people who aren't concerned enough. Hey, let's take a look at some data. Gold is an interesting commodity because it's generally been seen as a hedge against inflation. That's not exactly how it works in the real world. Like, gold going up all this time, there really wasn't very much inflation. Gold going down, there really wasn't deflation. Let's think of gold as something else. Think of gold as a hedge against disaster, like a debt crisis or a dollar crisis. And what we see is gold, it kind of goes up and down with money supply to some degree, but it's also affected by essentially the risk of the dollar system coming apart and default. So it is not like tips, which are like a pure inflation hedge. It's more like, hey, if things get really bad, I want to own gold. And this tell us that people are more concerned that things are going to get really bad. Now, at almost $2,000 an ounce of gold, that's not exactly a confidence-inspiring number, but it also is not an indicator of hyperinflation. That would be 20,000 rather than 2,000. All right, let's take a look at inflation itself for a moment. We've talked about gold as an inflation hedge or as an inflation indicator, which it is imperfectly. Historically, inflation-protected securities and other things are better predictors of inflation, but it certainly matters. It's more like an insurance policy. Think of gold as an insurance policy against a crisis. Now let's look at actual inflation. And what we see here is, well, this is just plain old inflation. This is the 1-year change in inflation. We go back to 1980, really high. So here's most recent. So we have to go back to about here, to 81. We have to go back over 40 years to find a time when inflation is as high as it is now. I think the ruling class establishment in Washington has completely covered itself in shame and destroyed its credibility. As all this is going on, they're saying deflation is the danger as they're pumping money into the system, and they're saying inflation will not be a problem. We're not going to get inflation, and here we go, we get inflation. And then they keep changing the goalpost. Well, our target is 2% inflation. Well, okay, we passed that here. Well, now our target is 2.5% inflation. Okay, well, here we are. Well, it's not 2.5% inflation. It's 2.5% inflation over an extended period on average. So you get to count this low here. It's like an average between this and this. Okay, well, there we are. We've used up that average. So now this is on average higher than 2.5%. Well, yeah, you're right. It happened, but it's ephemeral. It's transitory. It's going to go away. And it didn't go away. Around here, it's sort of like, inflation's kind of good, isn't it? And you can wear a sweater, and everything's fine just so long as you don't count food and energy, as if people don't use food and energy. So a lot of people were wrong about this. Markets were right, but the establishment class, a lot of people in the media, the people in the Fed, people in the government were wrong about this. By the way, this is a bipartisan issue. This inflation is not just a matter of money supply creation. Since then, money was building up here. And the person who's run the Fed was a Republican appointee and a Democrat reappointee. Inflation is a bipartisan consensus. Every party wants easy money when it's in power. Okay, so that's inflation. There's also something called core inflation. Now, the people in government like to look at core inflation because it takes out food and energy. It doesn't make a lot of sense because you need food and energy, but they argue that food and energy are volatile. They move around a lot, so any 1 month you can't really pay attention to what's going on with food and energy. Well, that's kind of silly because you could just do 1-year change in food and energy, and that takes care of the volatility. You can smooth it out. You can leave food and energy in your inflation statistic, and smooth it out by averaging it, or do 1-year change or 2-year change. So I think they're just kind of letting themselves off the hook. Anyway, this is core inflation, and it's month to month. So look, high, very, very high, and still extremely elevated. But, a little credit. I'm not just looking for horror stories. it's been dropping from January to February to March. The monthly inflation rate, more high frequency, not this compared to the same time last year, but this compared to the same time last month, has been tapering off somewhat. The inflation story got a little crazy, a little bit toppy. People got a little bit concerned about, for instance, hyperinflation, search terms on hyperinflation. Well, that really was a little bit more fear than was really justified. So when we're talking about inflation, we know that inflation certainly has been elevated. Hyperinflation doesn't seem to be what's happening now. It's not out there according to the market indicators. Inflation is slowing down a little bit, but it's still slowing down to abnormally high. So the stagflation outcome still seems to be something that's reasonably likely. Of course, people are more concerned about a serious crisis, and that's been showing up in gold prices, which we looked at, and I would say that's been showing up in some of the cryptocurrency prices. We're going to look at that in the next video. I'm Jerry Bowyer. Thank you for watching the Eagle Investing Network, and if you haven't done it, hit subscribe. Thanks for joining us.